US ETFs, US stocks, to which estate tax applies if the assets exceed $60,000 at the time of death.
In the US, this system sadly doesn't exist. In India, you have a very beautiful system of a nominee or a beneficiary. So in case someone passes away, the default is that the assets will just get transferred to the nominee or the beneficiary. Very specifically, there are these ETFs called UCITS ETFs. So these are ETFs that are domiciled outside the US, they're domiciled in Europe, and they track the same indices.
The other question that we often get when we talk about UCITS ETFs is the cost. So can you maybe with an example tell us how a UCITS ETF might differ from a US one?
Yeah.
Hello and welcome to the Fine Print. Global investing has absolutely exploded in India. If you just look at the LRS numbers, they are up to $300 million a month, $350 million a month or thereabouts, which is a 200% jump from what it was in the same month last year. And along with global investing, there are a bunch of questions that people have about basic things like nomination and succession. And we are going to address that today. Joining me is Nitish Sani, who is founder of Paasa. Welcome, Nitish.
Thank you, Neil.
So, Nitish, if you can start with the main problem, the main divergence versus the Indian systems of nomination and succession.
Yeah. I think just to encapsulate this in one sentence, in India, you have a very beautiful system of a nominee or a beneficiary. So in case someone passes away, the default is that the assets will just get transferred to the nominee or the beneficiary. In the US, this system sadly doesn't exist. So the need for you to explore other account structures or, go through certain formalities, I think that's quite important. And I think that's the reason, and that's what we're going to highlight today. But broadly speaking, in India, you just have the nominee beneficiary, which is not the case there. And so for that, I think there's a little bit of education that needs to be done because, like you said, so many platforms now exist that offer global investing, and not a lot of them do a good job with respect to this. And I think that there are reasons why it's a little complicated, and I think it'll be good to explore.
Absolutely. So we're going to address this on multiple levels. One level is the question of US estate tax and how do you de-risk yourself from that. Yeah. The second is the more complicated question of procedure, that what kind of account should you have?
Yeah.
What documents do you give to make sure that you get possession of the money of the deceased person? So Nitish, let's begin with US estate tax. As you said, a lot of platforms in India offer US ETFs, US stocks, to which estate tax applies if the assets exceed $60,000 at the time of death.
Correct.
So what is the easiest solve?
The easiest, leanest, cheapest solve is buying ETFs or instruments domiciled outside the US. Very specifically, there are these ETFs called UCITS ETFs. So these are ETFs that are domiciled outside the US, they're domiciled in Europe. And they track the same indices. So if I'm buying an S&P 500, like if I'm buying a SPY, for example, I can buy a UCITS ETF equivalent. And could be in Ireland, it could be in Switzerland. For example, for S&P 500, it's CSPX. For the NASDAQ 100, which is QQQ on the US ETF, but the UCITS equivalent is CSNDX or CNDX. So I think buying the UCITS ETF, because it's domiciled outside the US in Europe, in case someone passes away, the UCITS, because regulated by the EU, has this beautiful wrapper structure that makes the transfer of an estate very seamless. So the only estate tax laws that I have to comply with are the estate tax laws of the resident individual's country, which is India in this case.
Yes, and thankfully India does not have any estate tax.
Correct.
And nor does Europe for that matter, which is why Europe is a great place to domicile these ETFs. Mm-hmm. At least they don't have anything for non-European residents. Now, the other question that we often get when we talk about UCITS ETFs is the cost. So can you maybe with an example tell us how a UCITS ETF might differ from a US one?
Yeah, that's very fair. I think people's. I'm going to answer this in two different ways. One, tangibly, I'll just give you the cost differential, and then I'll give you the mental model you should have around this as well. So just taking the example for the S&P 500, for example, SPY, I think it has an expense ratio of I think it's 0.03% if I'm not wrong, and then the CSPX, which is the UCITS equivalent for S&P 500, has an expense ratio of 0.07%. So yes, it's 0.07%, but then the debate you're really making is, firstly, 0.07% is dead cheap. Like let's put that into context. Like 0.07% is dead cheap.
I mean, just for connection, your Indian mutual funds
Yeah.
can have expense ratios that go up to 2.25%.
Correct. So I think 0.07%, it's obviously incredible. And even, the more expensive ones, like if I were to buy an emerging market ETF, UCITS ETF, that would be around 0.2%. So I still think they're dead cheap. But then the mental model I would have with this is not, what expense ratio is higher. It's like, am I willing to sacrifice 40% of my estate for this 0.03 differential in expense ratio?
Yes. 40%, of course, being the highest rate of
Correct.
US estate tax.
Yeah.
So that is one. And just to finish off this point, people often worry that what if the rules change in Europe, or what if the system changes over there? To which I think that typically Western democracies with a rule of law, even if they do make changes, they tend to make incremental changes, not sweeping ones. And they tend to give you a period to adjust. So it's not like overnight anything's going to change. If there's something, it'll be well announced beforehand, debated in their institutions, and you can readjust to it.
Totally. And, I would say this, and it's not just, Indians who should invest in these UCITS ETFs, but if you see like fund managers in Singapore and Dubai, all of them, for anybody who is not living in the US, everyone advocates that you should invest in these UCITS ETFs. So everyone across the world is being preached the benefits of this instrument. So I fundamentally also believe that, I moved back from the US to India. I had this corpus of US ETFs, and I've migrated that all over to these UCITS ETFs. So everyone across the world is doing it. So I see no reason why not to. And it's also extremely cheap comparatively. If I especially want exposure to any, it's not only equities, but I could also buy a bond like a treasury UCITS ETF or a commodity UCITS ETF. So even the breadth of products that are there are so high. So I'm not limited by optionality. Obviously, I understand if folks are trading, then you might not want to trade an ETF or day trade an ETF. But if you're holding for the long term, then certainly I think
it's kind of funny. We had this event today, and one of the attendees was an NRI from Europe who had no money, no investments outside India. And he was also asking about the tax implications in Europe of Indian mutual funds, including global feeder funds, which is very ironic because essentially his money is being invested in places like Europe itself first by going through India.
That's funny.
So I told him that UCITS is actually primed for you if you're a Europe resident. Even in terms of tax, it'll get much more favorable tax than any Indian product or Indian mutual fund. So that's about UCITS ETFs. Now let's turn to the procedure of succession and what you should do to ensure that it's a smooth thing. In India, we typically tell people that they should be making wills, they should be doing nomination. But as Nitish mentioned earlier, there is no nomination concept in US.
Yeah.
So Nitish, let's talk about the different layers of protection that an investor can create for their family, for passing on their assets smoothly to their family. What is the first thing they can do?
The first thing that you should do on every account is add an emergency contact. So this is a caretaker of sorts. And in case anything goes wrong, the caretaker can get in touch with us, the broker directly. And then, there's certain processes that you need to follow, which we'll get into. But the first step that you should do is have a caretaker or this emergency contact on every single account.
Right. So it's not quite nomination, but it is somewhere a similar concept.
Yeah.
Apart from that, what else can an investor do?
The second is a joint account. So joint accounts make transmission very, very straightforward. In the sense that, if it's you and your wife, you and your child, in case of death, there is no need for that account to go under the formalities, to go through probate. And in case the primary passes away, the assets are automatically moved from the primary to the secondary by the broker itself. So that becomes a very easy and also cost-effective way. So, the cost to open an individual account and joint account is the exact same. So it becomes very easy, less hassle, cost-effective way to just ensure that your estate is moved correctly from the primary to the secondary.
Correct. And of course, not all brokers offer joint accounts. So it's important to select a broker which does.
Correct.
In which case you guys do.
Yeah. As of today, we are the only, incumbent as of today, we're the only fintech platforms in India that do offer the joint account facility. So, and this is by virtue of IBKR Interactive Brokers, because we're powered by them.
Right. So you set up the joint account. Now, when I speak about this, usually a set of questions follow. Number one, how does the taxation work? Because let's say that me and my spouse, we've contributed in such a way that is all my money. The spouse is only there so that there's smooth succession. So
Yeah.
who gets taxed?
Yeah, so the contributor will get taxed. So in the sense that if it's you and your wife on the joint account and you've made 100% of the contribution, the foreign assets, the Schedule FA, will be reported on both your ITRs, but the capital gains, the dividend tax, any relief that's to be claimed, that's only going to be on your taxation, your ITR documents.
Correct.
Now, say for instance, your wife also would like to contribute. So a very good idea there is you open another joint account with your wife as the primary and you as the secondary. Because, of course, there are many interpretations of that when it comes to this, but the most practical way of doing this is
It's the cleanest way.
it's the cleanest way. So in case Neil wants to contribute, if Neil is contributing 100%, then have one joint account with Neil's wife. Foreign assets will be on both of their ITRs, capital gains, FSI, etc., taxation incidents that only be on Neil's ITR. In case Neil's wife also wants to contribute, then in that case, she can open another joint account, or they can open another joint account with Neil's wife as the primary, Neil as the secondary, and contribution will be made there. And similarly, what I explained for you will be applicable to her.
Yes. Now that's the cleanest way. But in case people want a single account where both spouses do contribute, then how does taxation work?
In case both people, then it's simply it's by contribution. So for example, 50% is contributed by you, 50% is contributed by her. Then ensure that the total tax liability on the joint account is covered between the two of you. That's step one. And the best way to ensure the division of that is just by contribution. And pragmatically, that's again what all CAs would follow. But again, there are a lot of interpretations when it comes to this. So just keeping that in mind.
Sure. So basically, I pay half the tax.
Yeah,
She pays half the tax.
that's correct.
Now, one more thing to highlight here is that joint account need not only be with the spouse. It can be with a parent. It can be with a child.
Yeah.
It can be with a live-in partner, right? There is no restriction from the US perspective on this.
No, there is not. In fact, a big use case that we see is that a parent would open a joint account with their child. And when the child has gone abroad to study, then they would actually move the funds from that joint account to the child's bank account in the US or in the UK. So it actually serves very well as a savings mechanism as well, because the rule that we have in place is, and this is again by virtue of IBKR, is that anyone who is depositing or withdrawing to the account must be an account holder. So if the parent and the child is account holder, the parent can fund the account and the child can withdraw it. Of course, that invites a lot of declarations that you have to make in your taxation. The parent needs to make their taxation at the end of the year because you've changed the purpose code. But that being said, it's a very useful use case for a joint account as well.
So Nitish, we've talked about joint accounts and how when one of the two holders passes away, the other holder does not need to do anything, right? They already have access to the account. They can handle the account as before.
Yeah.
And that makes it a very smooth process. But just to complete the point, there is still the question of US estate tax.
Right.
So how does the surviving holder deal with that?
So there are two steps to follow here. The first is, in case, so let's put joint account aside first. Let's just look at individual accounts that have emergency contacts on them. So in that case, what the emergency contact will do is provide a death certificate, which is basically proof of death, time of death, and a succession certificate as well. So the succession certificate will basically say that, okay, this is...
If there is no will, if there's a will, they'll provide the will.
That's correct. So that'll supersede the succession certificate. And then, the broker, which is IBKR in this case, will consume both of those. And then the assets will go through probate, will go through, the formalities with the IRS. And then once it's gone through the formalities, then it'll be distributed to the respective individuals. Now, coming to the case of US estate tax, this is the step in the middle. Say, for instance, you have a portfolio that doesn't comprise of US assets or comprises of US assets less than $60,000. Then you need a signed certificate. You have to give that to the broker that acknowledges that you have less than $60,000 in US assets. When that is done, only after that the assets will be distributed. So that becomes this intermediary step in case you have these UCITS ETFs, and that $60,000 is not only for what's in your IBKR account, it's your total assets as well. So that signed certificate is very important to provide to the broker. And then after that, they'll carry forth the transmission without levying that up to 40% tax.
Sure. So just to sum up, if there is a single account with an emergency contact, and the emergency contact provides death certificate, provides the will, provides a self-certificate. So this is not issued by some CA or somebody else. It's issued by yourself, saying that your total assets in the US are less than $60,000.
Yep.
When you submit or upload these 3 documents, then IBKR or any other broker will process the process of succession. And coming to the point of US estate tax, so if you've been smart and you've not held US assets more than $60,000, so you put your money into UCITS ETFs, then that declaration is enough. Your certificate is enough. Now let's turn to joint accounts.
Yeah, joint accounts, the best part is, I mentioned this earlier, but transmission becomes very easy. So you will still follow the same steps, but because it's a joint account, there is no need for the assets to go under probate or will. So it'll simply go from the primary to the secondary, which eliminates the entire step of the broker dealing with the IRS, and it's just very straightforward to carry out transmission, simply speaking.
Okay. So Nitish, as we discussed, essentially, if it is a single account, if there is no joint holder in the picture, and that person has appointed an emergency contact, then the emergency contact will tell the broker that this person has passed away. Here's the death certificate. Here is a will if there is a will. Here's my proof of identity. And here's a certificate from my end or letter from my end which says that the deceased does not have any US assets more than $60,000, if that is indeed the case. And if all of these documents are given, then it's a fairly smooth process of succession.
Correct.
Now, if there is a joint holder system, it's easier because even though these documents still need to be given, the joint holder has continuous and immediate access because they had access earlier as well. And so if there's some important action to be taken, trade to be made, etc., then this does not hold up that process.
Yeah, that's accurate.
Right. So folks, when you are opening these accounts, do go for joint accounts if possible. Nitish, if somebody has already opened a single account, how does one make a joint?
That's a good question. We get this far too often. Essentially, what we do is for that individual, we'll open another account for them, which will be a joint account. Then the assets will be internally transferred from that individual account to that joint account. Now, obviously, this is an internal transfer, so it invites no sale, so there's no tax liability. It's also free of cost. So you just move the assets over, and then just as you were operating your individual account, now you're operating a joint account. So practically, again, we get this far too often, so we do this quite a bit. And and then you could choose to continue operating the individual account or just totally move to the joint account.
And what is the process for this? For me as an individual, what do I have to give you for you to do this?
You just provide us with the joint account holders' details, KYCs, and then that's it. And then we carry it all out for you. You don't have to.
Their Aadhaar card, their PAN card.
Yeah, Aadhaar, like typical Aadhaar card, PAN card, compliance questions. That's it.
What about NRIs? Can a resident Indian and an NRI have a joint account?
They can't. That's a good question. So that's an edge case. It's important that the two joint holders are from the same country of residence.
So two NRIs can hold a joint account.
Absolutely.
Together. Are there restrictions on which countries' citizens you will open accounts for and some which you will not?
Yeah, Europe, Singapore, and the US, they are blockers. NRIs in the Middle East, in Thailand, even Africa, we have customers from all these continents, from all these countries. But Europe, Singapore, US, we have restrictions there.
All right. So folks, there you have it. Just to sum it up, make sure that your investments are routed through UCITS ETFs, especially if the amount is more than $60,000. Ideally, have a joint account rather than a single one because your joint holder continues to have access and it's much easier for them to deal with the succession process. Designate an emergency contact. This is something the broker gives you. It's a form. You just mention that person's name, contact details, etc. When somebody passes away, be prepared with this checklist. and it's the same checklist that you will need in India. So you will need a death certificate in India, you will need a will in India. If not, you will need a succession certificate from a court. This is not specific to US assets. You will need it either which ways. The only document that you will need for the US broker is a declaration that your assets in the US do not exceed $60,000, which is over and above what you need for your standard Indian process. So just be aware of this, and I don't think it should be a very big issue. Nitish, anything that you'd like to add?
Yeah, I think generally I would just like to say at a high level that a lot of the hassle that people, or a lot of the overhead that people have with respect to global investing comes from succession, comes from inheritance. And we've tried to do a very good job putting all of this knowledge out there. That being said, if there's something that we haven't covered well, please just trouble us, trouble our support team, trouble Neil, trouble me, and then we'd be happy to take all of those questions, because whatever, whether it's taxation, whether it's inheritance, whatever it is, whatever sources of overhead that an individual may have, just like trouble us. And thanks, Neil.
Apart from all of this, if you do need help with making a will, that's something that we at the Thefynprint help with, as well as, of course, filing your taxes in India, especially if you have foreign assets. So do reach out to us on thefynprint.com.